Deven Choksey is with us. Deven, good morning. Good to have you with us here. Thanks for joining in. So, where are you most focused, Deven? The new stuff, not what you already have owned, but, new interest areas or new actionables. What's on your mind?
Yeah, Prashant, good morning. Well, I think given the kind of larger activity participation that India is doing with European nations and also with America, we have been looking at some of the businesses afresh, I think, including the companies which are there in the FMCG business as well. Some of the companies have their global parents sitting in Europe, and I think they have the possibility of integrating further into India. Uh, Currently, I think the about 5% or so to 5 to 10% kind of a business I think comes out of exports for them. We see a distinct possibility down the line 2 years, the export business could pick up for some of the Indian MNC companies and FMCG companies to around 15 to 20%. That is a possibility that we are seeing. And that too at a margin which is possibly higher than what India is producing. So the blended margin probably for Indian FMCG companies could possibly show relatively better performance. And that has started appealing us because I think if FMCG is one such area, I think there are many such other areas in which the businesses are getting integrated with the global players. Yet it is a little early to conclude that how much it is going to be turning out to be in the volume terms and the business revenue. But I believe that I think the initial moves as a green signal that we are getting from some of these companies, we see a possibility of some businesses doing well, including the companies which are providing the end-to-end solutions, say, for example, names like Tata Technology, where they are providing end-to-end solution to some of the European OEMs. And that's where probably the business is looking relatively more stable for them. The inflow of new orders probably, I think, showing some more positive directions. So selective companies, yes, I think we are looking at given the kind of a larger environment change that we are experiencing right now.
Okay, hi Deven, good morning. Good to see you in. Deven, I wanted to ask you about the gold financiers, namely Muthoot. Stock did very, very well. Gold prices were in an uptrend, which was good for business, and cost of borrowing was expected to fall. Now the problem is that the cost of borrowing actually didn't fall in the past quarter, and as the management clarified, that will happen with a bit of a lag. In addition to that, gold prices have come down as well, which has hurt sentiment. Stock is not cheap, but what's your view on Muthoot Finance, since that's been the leader, that's done very, very well? And in the same light, would you actually look at Manappuram now?
Yeah, Nigel, good morning. Well, as a strategy, we find ourselves more comfortable with the NBFC companies which are retail-focused NBFC companies and which are not particularly vertical-specific NBFC companies like gold. Even though I think we find that I think some of the housing finance companies as an exception to this rule, we believe that I think the companies which are catering to the larger part of the investors through the retail lending, they are relatively better off. And I think the story in companies like Bajaj Housing Finance or companies like Bajaj Finance, they appeal us more because they're using the technology to disperse the loan faster. They're using the technology to reach out to their customers faster. They're using the technology to, I think, underwrite the credit risk in a much better manner. So we like this kind of company who are using the technology platform to the core level. And that's where I think we do not end up necessarily focusing on a particular segment like gold as far as NBFC business is concerned.
Deven, have you analyzed some of these BPO companies? 2-3 years back, when AI was just gaining traction, generative AI, everyone thought that they would be the big losers. But actually, they've adapted themselves pretty well. And we were just talking to Girish Pai of Bob Capital, and he's underweight on Indian IT even after the underperformance. And he says the only buy call that he has is First Source. And even a couple of other people, like this entire BPO space, the Sagility, eClerks. What is your analysis of the KPO, BPO business listed here in India?
So, Rima, we believe that I think this particular business is undergoing a transformation understood fully. And I think they're using AI agents at the forefront in probably producing the solution. I'm not too sure whether these companies have actually started changing their revenue model. The revenue model, if it is becoming an outcome-based revenue model, which means I think the kind of KRs that they would assume from their clients, if they end up, I think, providing services in that direction, in my viewpoint, I think they could possibly be having a relatively better revenue going forward. But whether this transition is completely happening at this point of time or it is still in transition process, I'm not too sure. So we are not taking any fundamental call on these companies. Studying, I think, how the business model is changing at this point of time for some of them.
Got it. Any view, Deven, on some of these product companies? Yesterday's stock like Newgen was up more than 10%. The stock has seen a fair correction, but these product companies, in fact, could look a little bit interesting. Your view?
No, Nigel, immediately, I think nothing that we have seen in this kind of companies. But we believe that I think many of the Indian mid-tier IT companies, which are actually providing the productized solution to their customers, they are relatively in a better position to win new contracts. That is what I think we are getting the understanding from some of these companies. But nothing on horizon as far as our recommendation basket is concerned.
Okay, thank you very much for joining in. We will